think we got to recreate this event differently.
No, it's connected.
All right. Until somebody sees that we're here. We just popped up and people are going to be like, oh, VectorVest is live? Just trying to see if I see people here.
Yeah, this will.
Oh, I got a like already. Oh, 2 likes already. Is that you two?
Yeah, I did.
All right. People are starting to come in. I do see it. There we go. Hey, everybody who is here. This was an event that wasn't planned. We just did it on the fly. As I look at what's going on in the market, I'm listening to the Fed on another screen. The Fed's having his conference, and I'm looking at all the screens on CNBC and listening to the questions, taking some notes, just to keep you informed of what's going on in the market right now. So as I'm watching the market, the last time that I saw was still moving down. Ooh, we got a little bit of a rebound. Let me go put this into the software. A little bit of a rebound, and that's the beautiful thing about going live, is to be able to look at the indicators, look at the VectorVest composite, put me back onto the quad thingy, looking at the composite, looking at the Dow, looking at the spiders, looking at the Qs, probably take me off. All right, there we go. Just so that we can get a better, clear picture. And again, everybody is asking questions on CNBC, but I think the people like what the Fed is saying. So I took down some notes. My notes were that he expected inflation to peak in the first or second quarter, but now with the war, it looks like he's expecting inflation to peak possibly in the third quarter. He says that he expects inflation to still remain high for a while, but he can get more aggressive as he needs to with what's going on as far as interest rates. So questions are being asked. So if I pause, I'm listening to what he's saying on my other monitor. But nonetheless, if you want to chime in, by all means, please do. Let me know what you got, what you're hearing on your end as well. I'm curious to know. Dagnabbit, how do I? There we go. Let me move this over here. All right, so you, by all means, don't be afraid to chat. Don't be afraid to chat. Let me know what's going on. I know that this was just a spur of the moment, so all of you who are here, by the way, if you can hear me, do say something in the chat. Let me know that the chat's working. Say something in the chat to let me know that you that I am coming across loud and clear nonetheless. I do see some people in the room, but I want to make sure that the chat is working. And Joey, as we started changing back and forth, did my chat? No, Vicky is here. This is great. Thanks for coming on live with this. There you go, Vicky. So I'm putting that up there. Oh, I can't see what my screen looks like. It went away. You still there, Joey? For what it would take to do that, but I will say this, though. We'll be looking at the data as they come in. I guess I'm still coming. I'm still going. I'm missing something, though. We'll be looking at the inflation. I'm missing what my screen looks like. All right. Well, nonetheless, it doesn't matter. I'm glad that you're here. Again, if I pause, that means I'm listening to the questions that are being asked. If I pause, I'm listening to the questions that are being asked. All right, so he's picking somebody else. We expect inflation to return to 2%. That's what the expectation is. That's huge from where it is right now. That's going to be, is this a real-time screen? Yes, it is. You're looking at intraday 5-minute bars on all of the indicators right now. Joey, I'm missing the screen. Are you there?
Yeah, I don't know. You did something with OBS, so I can't see anything.
Okay, let's go see. No, that's the wrong thing. 1 second. There it is. Is that, there it is?
Yeah.
Okay.
What do you want?
I just wanted to see what my other screen is. Oh, this is what I'm looking like. Okay, this is it. I'm fine. Never mind. I'm good. So yes, this is real-time screen.
the talk over here. You put it on your second one.
It's on my first monitor. You want me to put it?
Put it on your second one.
Oh, darn. Okay. Try that again. There we go. Okay, so they're looking for questions. Somebody didn't know how to answer the question or ask the question. All right. Did it stop?
Yeah, it looks like it.
Okay.
There you go.
So right now, nobody else is asking questions. Or they can't hear. They're having some technical difficulties. For everybody who talks about us having technical difficulties, this is CNBC. I'm not hearing that. Oh.
Of inflation you believe the Federal Reserve is in your mind?
Okay.
So I just would say a couple things.
Skip, to see this screen,
Have the tools that
this is real time. We have end of day, we have intraday, we have real time. This is real time. You need to subscribe to real time to be able to see the indicators move real time.
run off the balance sheet. We will take the necessary steps to ensure that high inflation does not become entrenched.
Can they hear this, Joey?
Strong labor market. And as I mentioned,
Yeah,
if we
yeah.
conclude that
Okay.
it's appropriate to move more quickly, we'll do so. I leave it to others. To make
So it looks like right now, people like what the Fed is saying.
Follow on that, I wanted to get you on the record on this.
Let me go look
impact
at
has there
that.
been on your job, given the fact that you
What just happened? Okay.
We lost you in the middle of the question.
Well, I don't know what just happened to him. All right. So we're watching the Fed and we're watching the market. How cool is that, folks? How cool is that to be able to do that?
is not actually confirmed. Has there been any impact on your job or the Fed's ability to handle inflation?
None whatsoever.
So the question was, with inflation being the way it is, does this affect his job? He says nope.
Thank you, Michelle. Chair Powell, how concerned is the committee about the notable pickup in services inflation, which is perhaps less likely to self-correct? And to what extent does it alter both the committee's confidence that long-term inflation expectations will not de-anchor in the coming months, as well as the balance of risk that the Fed may need to raise interest rates further above neutral than indicated in the dot plot? Thank you.
Thank you.
There we
So,
go.
of
Look at
course,
that.
that's
The
something
Qs are
we're
liking what he's
watching,
saying.
Report by report, and it's certainly what we noticed that
Big time. So is the spiders and the Dow and the composite.
We have expected services inflation to move back up to where it was, and that's part of what's happening. Is
You're welcome, Monica. Thank you for being here. Everybody who's here, thank you for being here.
Where they were before the crisis. In other cases, it's pretty clear that inflation has spread more broadly across services, and yes, that is concerning.
So inflation is spread more broadly against services.
Really, in this latest report, it was confined to vehicles, which is admittedly a large category. So, as I mentioned, the committee acutely feels its obligation to move to make sure that we restore price stability, and is determined to use its tools to do so.
Tech stocks really starting to move, folks. S&P stocks starting to move. The Dow looks like it's lagging behind those two. Our VectorVest composite is moving up nicely too.
I wonder if you could help me understand the kind of logic, if there is one, inside
Steve Leisman.
the median forecast, for example, for unemployment. It runs for the 3-year window below the long run rate.
Wow.
I look at inflation,
This ain't so. I'm loving this, Joey. That
the long run, or
a
call it the neutral
big
rate.
thing like CNBC has technical issues.
In a regime,
Yeah, I sent you a link in the chat. Why don't you use that one instead? Because it seems to be a little better.
I guess my question is this: are you not
Don't have them both
correct
open,
with
please.
the forecast here that essentially suggests
Or you
we'll
can
be
mute this one if you
continuing to
want,
run
so you get the other one
further
out.
behind the curve and never really get
All right, let's go see if I can get that. You sent it to me in yours.
In your chat.
Okay.
In this chat that we're in right now.
All right. There we go.
There's no, it's not something we
There
voted
we
on.
go.
It's not a plan.
Close
But
what?
if you look, people
That
people
first
do
tab.
have their in by the end of this year, broadly people
Okay.
are at or close to, or in some cases above,
All right,
their
you guys
estimates
still
of
with me?
longer-run neutral interest rate. Okay, so that should
You guys still with me?
stop
Let me
pushing.
know.
That should, in other words, that should be a removal of accommodation for monetary policy, basically. At the same time, we will have done significant balance sheet runoff, and you can think of that as further. In the next year, and just looking at the median,
Oh, come on.
you're now above above the what people estimate to be the longer run median. So and also in many people's
All right,
forecasts,
Patrick
that
is
actually
here.
amounts to-
Thank you for
to,
being here,
tight
Patrick.
policy in real rates as well. So why does unemployment remain at 3.5%? You know, I mean, a couple points. One is the connection between in the economy we had before the pandemic, the connection between
You have to
inflation
turn your
and the
speaker
level of
down a little bit,
unemployment
Glenn.
rate
It's
was
echoing.
not very tight. But this is clearly what this is an expectation that really it amounts to that the idea that wage increases, which are now running above the level that would be consistent over the long run with 2% inflation, will move back down to levels which are still very attractive.
So wages, he's looking to move further down,
but not to a point where they're pushing
matching up with employment or
inflation
lack
anymore.
thereof.
And as I mentioned, there are a lot of factors causing inflation to come down. And you know, the reality is there are many moving pieces, and we don't know what will actually happen.
He says there's a lot of
No
things
matter
making
what
inflation
happens,
come down.
this is
What
a committee
things?
that is
What am I
determined to use
missing?
its tools to make sure that higher inflation does not become entrenched.
All right,
And so
5-minute
we are
bars.
determined on
Watch the
that
Dow.
front, and we'll deal with what
Watch the
comes.
spiders.
This is a modal or
Little
most
wicks at the
likely
top.
expectation, but we'll deal with what comes, whether it's better or worse.
I think when he started talking about jobs, I don't think people like that too
Thank
tough.
you. Let's go to Chris Rugaber at the AP.
Hi, thank you. Well, let me follow up a bit on that. I mean, there are a lot of economists skeptical that you can reduce inflation as much as you've penciled in.
He said he
without
wanted to bring
raising the
inflation back down to
unemployment rate.
2%. That's going
I'm
to be a
wondering
tough
what are the mechanisms
pill to
you
swallow.
see in reducing demand. I mean, outside housing and autos, how do higher Fed rates reduce consumer demand unless it's through higher unemployment? Thank you.
Well,
So he's talking about the raising in the rates
take a look
compared
at
to
today's labor
unemployment.
market. What you have is 1.7 plus job openings for every unemployed person. So that's a very tight labor market, tight to an unhealthy level, I would say. So in principle, if you
1.7
were-
job openings for every
Let's
person.
say that our tools work about as you described, and the idea is we're trying to
It's still
better
pretty
align
loud,
demand
Glenn.
and
I don't know if you
supply,
can
All right.
maybe
just
put
say in the
headphones
labor
on or
market. So
something,
it would actually,
or if you can turn it down, but I don't,
if you were
still
just
gotta hear
moving
it.
down the number of job openings so that they were more like 1-to-1, you would have less upward pressure on wages. You would have a lot less of a labor shortage.
Man,
which is
everybody
going
gonna
on
see how fat I
pretty much
really
across the
am.
economy.
I can't
We're
even
hearing
reach
from
my speaker.
Companies that they can't
Shut up,
hire
Patrick.
enough people. They're having a hard time hiring. So that's really the.
But now I
thinking
can't
is
hear
we-
you.
these
But
are
I can
fairly
hear.
well-understood
I can hear you
channels,
now. Say something.
interest-sensitive, and
Yeah, why couldn't you hear
basically
me?
across
Oh,
the
I can hear
economy,
you in my
we'd like to
headphones too.
slow
Okay.
demand
Correct.
so that it's
Okay.
better aligned with supply, gives supply at the same time.
All
time
right.
to recover
So you guys
and get
not
into a
listening now.
better,
So I'm just.
a
Hopefully
better
you're
alignment of supply and
watching
demand, and that
at
over
home
time should bring
somewhere.
They can
inflation
still
down.
hear. They can
Huh?
still hear.
And I'll
They
say
can still
again,
hear.
we don't have
Okay. Oh, they can still
perfect
hear.
crystal
Okay,
ball
cool.
about the
All right.
future,
You should put
and
your
we're prepared to
headphones
use our
on in your
tools as needed
CNBC. I
to
did,
restore
Brian.
price stability.
The
You know,
Fed
with-
always
as I
screws
mentioned in my
things
opening
up
remarks,
for
without
the
price
markets. Well,
stability,
that was the
you really
scary
can't have
thing
a
about
sustained period of maximum
after
employment.
he started
It's
speaking in
one of our most
regards
fundamental
to
obligations is
the
to
2 o'clock
maintain
announcement
and restore,
was how were
in this
people
case,
going to
price stability.
respond
So we're very committed to that.
to what he's talking
Of course,
about.
the plan is to restore
Okay.
price stability while also sustaining a strong labor market. That is our intention, and we believe we can do
So
that.
he's been
But we have to
saying
restore
about a
price
strong labor market. The market is got a lot of jobs,
let's
but
go to
people are
Scott
not coming
Horsley,
back. And I
NPR.
think it's got to do with a lot of things. Retired people are not coming back to do side jobs, and
some of the same ground
the
you just
wage
talked about,
gap.
Mr. Chairman. I think I
So-
missed some of your answer there, but I have a follow-up question on the
Thank
the
you,
labor
Tabula.
force. We have seen some gains in the prime age workforce in the last few
Okay.
months. I wonder what you anticipate when it comes to some of the older workers as the health.
Older
outlook
workers
has
is what I
changed.
just
Are
talked
we
about.
going to see more recent retirees following Tom Brady back in the workforce? And what would that mean for wages and inflation?
Well, I think if older people came back
It's
or
hard to say.
retired
You know,
people, that would help the
what we saw in the last cycle
employment.
was that over the course of a long, steady expansion, labor force participation outperformed expectations, and that was just it was a tight labor market, but it was nowhere near as tight as this labor market, but it was a tight labor market.
Tight
so
labor
people
market.
stayed in the labor force longer. It wasn't so much people.
All right,
coming back
we're
in
watching
the labor force after
the bounce,
retirement.
folks.
That's not something that happens.
Watching
in
the
aggregate
bounce.
very much, but so that's what was happening. And more labor force participation is tremendously welcome, and of course our policy does not in any way preclude that. This is a situation where wages have moved up at the highest rate in a very long time.
Does everybody agree with that
people were able to
wages
quit
have
their
moved
jobs
up
and
at a
move to
higher rate than
better
any
paying
other
jobs in the
time?
same
Do
industry,
you
different
see
industries.
that?
So it's a really attractive
Do you
labor
guys?
market for people.
I
And
don't.
once, as we
I want to
get past
chime in. Do you
COVID,
agree
well
with
and
that?
truly, it becomes an even more attractive one.
Because
so we
I
hope
think if
that
they
that
were
will lead to more labor support.
higher,
That's a
more
good thing
people
for the
would be
country. It's a
working.
good thing for people, and it also will, we think, help relieve some of the wage pressures.
Thank you,
that do
Damien.
put inflation more at risk.
Yeah,
That last part is
I'm listening. He
we'll
just
have to see
said
whether
it that
empirically it winds up
wages are
that way.
at
But
higher
in
rates than they
principle, it
have
ought
been
to
in the
help with
past, and
inflation
I
as
don't.
well.
I don't see
It's
that.
not the only thing
That
we're
doesn't
looking
make
for from
sense.
inflation. We're looking for,
And I don't know what
from a number of
numbers he's
different-
looking
number
at,
of
but that
different,
doesn't make sense to me.
places, and most importantly, from our own policy.
Wages are out of line with inflation, absolutely. But for him to say,
Okay,
"Oh
let's go to
no,
Rich Miller at
it's
Bloomberg.
moving up," yeah, I don't either.
Michelle, and thank
Next
you,
question.
Powell. I'm sorry, I'm having some communication problems, so I've missed some of the stuff you've said, and my apologies if this has been asked. Since the FOMC met last January, financial conditions have
I agree with that,
markedly. Equity prices down, treasury yields up, bond spreads risen, yield curve has flattened a lot, and even further this today, dollar is up. Is that welcome? And would you like to see more in order to
All right.
achieve your goals?
There's a new bounce.
As you know, policy works through
There's
financial
a new
conditions.
bounce.
That's how it reaches the real economy, by just the mechanisms you mentioned. And remember that the financial conditions we had.
If
for the last
wages
couple
have
of
risen,
years
it's
were a
totally
function
relative
not
to
only of
inflation.
very
I agree with that,
aggressive
Vicky.
and, appropriately so, fiscal policy, but also highly accommodative monetary policy.
So
The
if he's
monetary
even
policy
saying that
settings
they've
that we put in
risen,
place at the
you know,
worst parts of
if
the
it's not
pandemic.
keeping up with
So it is very
inflation,
appropriate to move
you're
away
right,
from
it
those.
doesn't
And
make
yes,
sense.
That will lead to some tightening in financial conditions in the form of higher interest rates.
So
and-
Michael
and
says
just
a lot of
sorts
people have
things.
moved up, and
I'm
that
not
same thing
targeting
that
any
Patrick
one or
said.
more of those
Maybe
things,
that's
but
what he's talking
financial
about, but
conditions generally
you can say that.
should
That's
move to
talking
a more
sort of kind
normal
of
level
double
so that
speak.
because we know
Oh
that the
yeah,
economy no
they've
longer
gone up,
needs
but does
or
it keep
wants
up with inflation?
these
If it
very
doesn't,
highly
that's sort of kind of
accommodative,
double speak there. It's my
stance,
opinion.
which,
It's
you know,
my opinion.
So it's time to move to a more normal setting of financial conditions, and we do that by moving monetary policy itself to more normal levels.
Monetary
Move to a
policy.
more normal setting for financial conditions. That suggests to me that you want financial conditions to tighten further from where we are now. Am I drawing the right inference from that?
Well, yes. So I would say we look at a broad range of financial conditions, and of course, when we tighten monetary policy, we do expect that they will adjust in sync over time with monetary policy. It's not any particular financial condition, but a broad range of financial conditions. They will reflect, to some extent, they reflect any number of things. But yes, we need. Our
Yeah,
policy
I
to
agree with you,
transmit
Patrick.
To the real economy. And it
As
does
long
for
as
us- does
prices
go through
increase
financial
faster than
conditions,
wages, we
which
all
means as we
lose.
tighten
I
policy,
hear you.
or remove accommodation so that it's at least less accommodative, that broader financial conditions.
Thank
will
you,
also
Vicky.
be
I
less
appreciate that. It was something we did at the last minute. It was a last minute thing to
you.
do
Just a
this,
little
to go
housekeeping
live.
note.
So
Those
thank
of
you guys for
in
showing
this
up.
call may be having some tech issues. If so, I understand the broadcast is coming through clearly on www.federalreserve.gov.
All right, I'm
You might go
moving
there
this
for the
out.
audio. And now we'll go to Gene Young.
You guys can still hear everything, even if it's not on the screen, right? Yes or no? Let me know.
I wanted to ask about the balance
Yes.
sheet
Okay.
discussion you've
See it on
had
the
this
desktop
meeting.
audio.
Can you give us any more details? Did you discuss whether to cap runoffs or whether to increase those caps over what period, if there were any details?
All right, so now we're looking at almost a full day
at our meeting today and yesterday, we made
of 5-minute bars going into the close.
Parameters of a plan to shrink the balance sheet. And I'd say we're now in a position to finalize and implement that plan so that we're actually.
The cool thing is that we are watching this real time live, folks.
As soon as our next meeting.
Real time live.
It's not a decision that we've made, but I would say that that's how well our discussions went in the last 2 days.
So keep in mind the Fed. You're welcome, Maria. Thank you for being here.
Of the broader financial and economic context.
This guy is just painting the tape. So, Jim, I'm not going to say, I'm not going to call it lying. He's reporting just as he says. If the minimum wage has risen, which it looks like it has, that's real.
In terms of the
other side of the picture, just like Patrick said. What's that mean? I'm looking at you. I'm looking at you.
We're literally just finalizing them. But the framework is going to look very familiar to people who are familiar with the last time we did this. But it'll be faster than the last time, and of course it's much sooner in the cycle.
I'll let you do what you do.
But it will look familiar to you, and I would also say that there'll be I'm sure there'll be a more detailed discussion.
Joey is doing a whole bunch of stuff on the fly. Joey is doing a whole bunch of stuff on the fly. Just go up and down if I'm good to go with the mouse. Okay. We should watch for upcoming declines in the market. ETI. The earnings trend indicator, I think, will start to get affected by inflation, by interest rates. That will happen, but that's what it's designed to do, to look at the 30,000-foot view picture of what's going on. We still got about 51 minutes before the markets close down.
What is it that the Fed is trying to do other than bring inflation down? In other words,
can you crop that bottom up a little bit on the YouTube tab
until it comes down to an acceptable level?
Yeah.
Yeah. So
on the chat,
I want to clear one thing up.
No, on the video that you're watching.
Nothing in our new framework or the changes that we made
does it not let you?
has caused us to wait longer to raise interest rates. What we said in the framework changes was, and this was really a reflection of what had happened for the preceding couple of decades, actually. What we said was, if we see, low unemployment, high employment, but we don't see inflation, then we're not going to raise rates till we actually see inflation.
So low unemployment, high employment, and inflation,
in which if we got a burst of
he
really
can back off of
we would wait to
raising
raise rates.
rates.
That's simply not in the framework. In fact, quite the contrary.
But if inflation is still rocking and rolling,
expectations at 2%.
He's going to have to think about being more aggressive, especially to get down to the 2%.
We can't blame
especially to get down to the 2%.
It was a sudden, unexpected burst of inflation.
I agree. Not with a 0.25% raise. The economy can handle rate hikes. The Fed can't. Well, from that perspective, the Fed is still trying to be as Goldilocks as it can. I don't think they want to push too hard to hurt the market, because if he does push too hard, market will go down. I think we were expected for the quarter point. I would have loved to have seen him to go for a full 100 points. That would have just today, that would have just killed everything. It would have killed everything. So he's trying to walk the tightrope of placating everybody the best way he can. And I think the Goldilocks scenario right now is a quarter, a half, no more than that. But if he's trying to get down to 2%, he's going to have to get more aggressive on the move. He's going to have to. Well, the next 6 weeks will show when he does the next hike. James says Glenn's death cross prophecy is going to happen. Remember, what we're seeing here is response from this.
If I could follow up by asking, I guess what you'd call it is the Paul Volcker
question. Let me move this over for a second.
I don't think unemployment is going to rise significantly, but if it does that temper your desire to keep raising rates?
Well, the goal, of course, is to
I want you to see this, so in case you didn't see the video.
A strong labor market. We have a dual mandate, and they're sort of equal. But as I said earlier, you know,
The death
price
cross,
stability is
intraday 5 minutes, put this on
an
6 months.
essential goal. In
Boom.
fact, it's a precondition really for achieving the kind of labor market that we want, which is a strong and
Death
sustained
cross.
labor market. We saw the benefits of a long expansion,
6 months.
a sustained labor market. It
Boom.
pulled people back in, and there were
Look at that.
really no
And
imbalances in the economy that threatened the long expansion. It just
death
the
cross.
pandemic arrived. It was just a completely exogenous
6 month.
event. So
This
that's
was a
how we're
video
thinking
I
about it.
just did.
We of
You
course
guys can
want to
still hear what's going on in the background.
you know,
But
price
this is
stability
it.
with a strong
The
labor
composite.
market. But we do
The
understand
50
also
went
that
below the
really
200.
you can't have maximum
The Dow,
employment
the
for
50
any
went below the
sustained period without
200.
price
The
stability.
Qs,
So we need to
the spiders.
focus on price stability in particular,
That
particularly because the labor
could be
market
the
is so
precursor
strong,
to a
and the economy
downward
is so
moving
strong. We
market
feel like
or a
the economy
major
can
pullback in the
handle
market
tighter
or a
monetary
pullback in the market. What we're watching intraday, though,
Let's go to
is
Brian Chung at
response to what the Fed is saying today. That's what we got going on right now. Intraday, 5 minute bars, current day.
About how you are communicating what
Intraday,
the Fed's
5
doing
minute
here today
bars,
to the average
current
American
day.
who might not be reading the dot plots or understanding what the SCP is. How is the 25 basis point hike today and then the signaling on future Fed policy going to address the inflation that they're feeling at the stores on a daily basis?
Sure. So I guess I'd start by
Good
just
question.
assuring everyone.
So what is the
that we're
Fed
fully
doing?
Committed to bringing inflation back down.
How is this
and also
helping people?
sustaining the economic expansion. We do understand that these higher prices, no matter what the source, have real effects on people's well-being. And really, high inflation takes a toll on everyone, but it's really especially on people who
There you
use
go.
most of their income to buy essentials like food, housing, and transportation.
And Joey put the link to the Death Cross
We've all
video
seen
in the
charts
chat.
that show if you're a middle-income person, you've got room to absorb some inflation. If you're at the
So
lower end
middle
of the income spectrum,
middle
it's
class
very hard
people
because
have
you're
some
spending
room
most
to
of your-
absorb some middle class and
money
some
already
inflation.
on necessities and the prices going up.
That's
So-
kind of funny.
but it's punishing for everyone. So it has been a difficult time for the
No.
economy, but we do anticipate that
Inflation
will
sucks.
move back down, as I mentioned earlier.
All right, here's
It
the
may take
session
longer than
highs
we
for the
like, but I'm
day on
confident that
5
we'll
minute
use our
bars.
tools to bring inflation down. And you ask about rates. So the way that works, I would explain, is as we raise interest rates, that should gradually slow down demand for the interest-sensitive parts of the economy. And so what we
Borrowing.
would see
Interest
is
parts of the
demand
economy
slowing
is
down, but
borrowing.
just enough so that it's better matched with supply. And
We
that
watched the
brings-
Death
that will
Cross
bring
video
inflation
last
down
night.
over
Great
time.
video.
That's our
Thank you
plan.
for that, Vicky. So the answer to that question was, what does the average American get from what he's
Chair Powell,
doing?
thank you so much for taking my question, doing this today.
I don't know if I
my
like
question
the
is a
answer.
follow-up to what Brian just asked. What is your message to consumers out there who can
Okay,
no
so she
longer
followed
afford
up.
the basics due to this high inflation?
Hey,
that
Miss
is-
McClintock.
Yes, indeed. I mean,
All right, I want to hear his answer to
as
this.
I just said, I think we do understand very much, and we very much take to heart that it's our obligation to restore price stability. And
Price stability.
We've had price stability for a very long time, and maybe come to take it for granted. But now we see the pain. I'm old enough to remember what very high inflation was like. And we're strongly committed.
High
as a
inflation was
committee
back in the
to not
70s,
allowing
yes?
This higher inflation to become entrenched.
Y'all help me out.
And to use our
High inflation back in the 70s, yes or no?
More normal levels.
I don't think
which
it was
our-
the
our
80s. I
target
think it was the
is
70s.
2% inflation. So we will do that, and I just would want people to understand.
thank you,
that.
Ms.
And that's- but
McClintock,
the way we do
70s.
that is by raising interest rates and by shrinking our balance sheet, and so financial conditions will become.
Didn't they finish shrinking the
margin less
balance sheet?
supportive of
Or are they
various
still
kinds of
shrinking
economic
the
activity
balance
that
sheet?
will
I thought
slow
they
the
finished
economy,
it.
while also allowing the labor market to remain very strong. And the good news is the economy and the labor market are quite strong, and that means the economy.
All right.
we
Is it
think,
me,
can
Joey, or
handle,
did I just lose audio?
interest rate increases?
And as a quick follow-up to that, obviously the Federal Reserve walking this very complicated fine line,
Hey,
trying to
did
avoid a
everybody lose
recession.
audio?
For the consumers out there who are worried about
Okay,
their
I got
jobs
it now.
and possible recession, what do you say to that?
Well, I say that our intention is to bring inflation back down to 2% while still
He's
sustaining
really
a strong
aggressive
labor
with this 2%
And if the economy is very
inflation,
strong,
man.
If you look at where
Wow.
forecasts are, people are forecasting growth that's strong within the context of U.S. potential economic output. And we expect that to continue.
Thank you,
To the
Maria.
extent the data come in different, then of course our policy will adapt. But
80s was
we do believe that our policy is the
17%,
appropriate one for this
70s
forecast, and we
8.
believe that we can bring down inflation. We believe that we can do so while sustaining a strong labor market.
I
labor
can't
market
see with a quarter percent, with a quarter, 25 basis point.
We have not seen a labor market where there's
at about 8%
1.7
inflation
job openings
getting
for
down to
every
2% over the year.
or where
I don't
there,
see
if
it.
you add,
Does anybody else see that? Can you
job
see
openings
that?
to those
And
who
if
are
he gets
employed,
really
that's
aggressive with the
actually
rates,
substantially a larger number than the size
it's-
of the
the
workforce.
market's going to
than
respond.
The number of people who actually count themselves.
the
as in
market's
workforce.
going to
This is
respond, and
a
it's going to
situation where
be
demand is
a
higher than
recession.
supply.
Glenn, if he
And when
can
that
do,
happens,
Glenn,
prices
if he can do that, but I don't know how. I'm with you, Vicky.
So
I don't.
We need to use our tools.
1968 to
move
82 and
supply and
rising
demand back.
inflation,
We don't
stagflation,
think we need
market
to do this
falling, and rising
alone. There will be
inflation.
other factors
I'm
helping
with
that
you,
happen,
Jim. I
but
don't
we
think
certainly are
2% is
prepared to use our
happening.
tools.
I really don't
and
see
we will.
that. And if he gets super aggressive, folks, like I
Thank you.
mentioned,
Let's
the
go
market's going to
Simon at
respond.
The Economist.
The market's definitely going to
Thank you, Michelle.
respond.
Thank you, Chair Powell. Sorry to take you away from inflation for 1 minute. May I ask about the sanctions on Russia and specifically the freezing of the central bank assets?
I
Of course,
watch
that
the
raises
market,
a similar
folks.
risk for other sovereigns
Watch
around
the
world
market.
and their biggest companies potentially. Any concerns about in the long term how this might affect the dollar's status?
So how
as
is
global reserve
sanctions
currency?
going to affect
And in the past couple of weeks,
the Russian
have you had
sanctions
sort of
affect
kinds of reassurance to other central
us?
bankers around the world?
bankers? Okay.
So, of course, central bankers around the world are generally very, very in favor of all of these sanctions. But let me say this:
Right,
sanctions
Patrick.
are really the business of the elected government, and that's true everywhere. So, the administration and the Treasury Department in particular, and other agencies, they create these sanctions. We're there to provide
I can
technical
set this
expertise,
as
but
a
they're
short.
not. It's not our decisions, so I'm reluctant to comment on sanctions really much because again they're not for us. We have a very specific mandate, and these are
What is
really
that?
the province of elected
Oh,
governments, as I mentioned. So
What-
I have
what
to leave
is
it at
that?
So, sorry.
Thank you. Let's go to Nancy Marshall-Genzer at Marketplace.
I don't know what that was, Patrick.
Hi, Chair Powell. Thanks for taking the question. You've been talking a lot about rising wages, which on the one hand is a great thing, but are we
Oh my gosh, I'm not watching that. Why are you distracting me, Cy?
So the way I would say,
Yeah,
is
I
that
hear you,
we,
Tommy.
First of all,
He
I would
never-
agree with the premise.
I
that
can't
wages
believe he
moving
went
up is
through
a
all
great
that
thing,
transitory.
That's how
Oh.
the standard of living rises over time, and generally it's driven over long periods by rising productivity. But what we have now, if you look at these the wage increases that we have, we look at we're blessed with a range of measures of wages that all measure different things. But right now they're all showing the same thing, which is that the increases, not the levels, but the increases are running at levels that are well above what would be consistent with 2% inflation.
2%. So he's saying that the wage increases are in line with 2% inflation.
That phenomenon will be.
Well, we
It's
ain't
very
at
hard to
2% inflation, so the wage increase
and that's really
is just
I think
poopy.
the sense of your question about a wage price spiral is that something that's going to start happening?
Glenn,
and
ask him a
become,
question. Call him.
Entrenched.
Hey,
in the
Joey,
system?
get him on the phone.
We don't see that.
Let him know it's Glenn from
You can
VectorVest.
for
Let's see if he
example,
takes my call.
In some sectors that
Oh,
got
like,
very
excuse me,
high
everybody, it's
wage
Glenn from
increases,
VectorVest.
Early on, those
He's
wage
part of
increases
VV
look like they
Nation.
may
I got to go talk to him.
have slowed
All
down
right,
to a norm-
look at the
normal level, but
spiders
it's-
approaching
it comes
highs
back
for
to,
today.
you
Look
know,
at the Dow. Oh,
what-
look at
what
the
I'm saying here,
Qs.
which is
Everything's moving up. Everything's moving up.
There's a misalignment of demand and supply, particularly in the labor market, and
Just tell
that is leading
Powell
to
is VV Nation on
wages
the
moving up
phone.
at ways that are
He'll be like,
they're not
oh,
consistent with 2% inflation over
it's
time.
Glenn, the Dane.
And so,
It's Glenn
we
from
need to use our
VectorVest.
tools to,
Oh, you can come on in. You can come on in.
guide
Thank you,
inflation
thank
back
you.
down to 2%.
I don't know
that
how
would
many
be
people
in the
caught
context of
what
an
that was from.
extraordinarily strong labor market. We think this labor market can handle, as I mentioned, tighter monetary policy.
So he thinks the labor
and the
market
overall
can
economy
handle
as well.
tighter
But
monetary
yes,
policy.
Wages.
But if people ain't
are moving
working,
up
how does
faster
that?
than it's
How do you,
consistent with 2%
if people are not
inflation,
working?
but
How does
it's
that
good
make
to see them
sense?
moving up, but it wouldn't be sustainable.
I'm just
over
asking.
too long of a period. to
I'm
see them
just
moving up
asking.
that much higher. And that's
All right,
because of this
Spiders,
misalignment between
nicely
supply and
coming
demand.
into the close. We got about 40 minutes or so coming into the close. The VVC, the Dow, the Qs.
This time we've gotten much less.
Oh, yeah, we watching this real time,
it's not easy
baby.
to predict these things. But we do expect that we'll get
You
people
were
coming
supposed
back
to
in the
be a
labor market,
comedian. No,
particularly
Francisco, not
as
even.
COVID
Not
becomes
even.
less and less of a factor in,
You know what
in
my
many
spiritual
people's
gift
lives.
is? The gift of
Something we
gab
all
and teaching.
wish.
That's my gift.
But so that's how we think about
That's my gift. There it is. Q's about to hit session highs. The composite hit session highs. The spiders and the Dow a little bit off of that, but it looks like the Q's and the composite there.
That should have moved earlier, and it sounds like today that you don't think that the Fed is late, and I just wanted to
Ooh,
get
good
your
question.
clarification on that. And if it is,
The Fed doesn't feel like it was late to the party. How many people think that the Fed was late to the party? Type of one. How many people feel that the Fed was late to the party? Type of one.
We are not.
Especially
we
with
don't
all
have
the
luxury of
transitory
2020
talk,
hindsight
right?
And actually implementing real-time decisions in the world. So, the question is, the right question is, did you make the right decisions based on what you knew at the time?
Did you make the right decision on the things that you knew at the time?
Now. So I think if we knew now, of course, if we knew now that these supply blockages really and the inflation resulting from them in collision with
No.
that was what was going to happen.
Inflation was
And in
inflation
hindsight, yes, it
prior
would have been
to the
appropriate
blockage of the shortage of stuff.
Obviously,
and
it
he
would
kept
be,
saying
but-
it was
but again,
transitory.
we don't have that luxury.
No.
And then, but that's a separate question from your other
If I
question.
knew
which is
now
behind the curve,
what I knew
I don't have
back
the luxury
then, this could have been different.
Of looking at it that
Inflation
way. You know,
was running. Why? Because of quantitative easing.
We have our tools.
We were pumping so
tools,
much. So many people
and
were
the
getting
committee is
stimulus
very
checks.
focused on
You're going to say that
using
putting
them. We're
that money
acutely
into
aware
the
of the
market,
need to restore
right,
price
pushing
stability
prices higher,
while keeping a strong labor market. And,
was transitory?
What I saw today was a committee that
There's no way that you can sit there and say, well, if I knew back then what I know now, that
use our tools to do that.
we could have come.
We're not going to let high inflation.
I'm not
become
letting him
entrenched.
get off the hook on
cost
that.
of that would be too high.
All right, I'm so
And
not
we're
letting him
gonna
get
wait
off the
so
hook on
long
that.
That we have to do that.
Oh, it's
No one
okay. It's
wants- No one wants
transitory.
to have to really put restrictive monetary policy.
How do
on
you
in order
think that
to
quantitative
get inflation
easing
back down? So
is not going to
frankly,
increase
the
inflation?
need is one of getting back.
Money
up,
is
getting
so
rates
easy
back
to
up
get at that
more
point,
neutral
right?
Levels as quickly as we.
It's going to put more money into the economy.
And then moving beyond that, if that turns out to be appropriate. And as you can see, it is appropriate in the sense.
I'm sorry, Global says, got to listen to his answer to these really dumb questions. What are you trying to do, Glenn? Make folks panic?
Their estimate of the longer run.
Sigh, no.
And there's also a range of estimates, too.
I should listen to his answers. You're right, Global.
But thanks for your question.
Okay. Glenn is just yapping his trap. Look at that.
Thanks, Mr.
The
Chair.
Q's right at session highs. The composite is there. The spider is there. Oh, it's over? Joey, I can close that window, right? Joey?
Yeah.
All right. So there we go. We were able to watch the live reaction to the conference and watch what the markets are doing. We still have about 34 minutes until the market closes, but look at the nice run up. So I guess overall, the markets must have liked what he said. All right, continue to print money and inflation will continue to climb. Well, I guess we had to stop. I know Nart says no buy. Powell just left, said see ya. He didn't even sign off like I do. He just left. He was like, I'm out of here. I'm out of here. All right, so, hey, this was kind of fun, huh? Being able to go live on the spot. It took a lot of work in the background because we didn't have any real process for doing this, but the team in the background did really good job to get us able to go live on the spot. It was a last-minute thing. All right, it was a last-minute thing. I'm glad the people who showed up here did. We didn't put out an alert. I think if we ever do go live, there's probably no reason to put out an alert, I think, in my personal opinion, because the people who follow us, well, I don't know how you found us. Joey, how did they find us? Were they just on YouTube and they just said, oh, VectorVest is live?
We sent an alert.
Oh, you did send an alert. Okay, never mind. All right, you did. I see. I didn't even know. It was so much in the background going on that I didn't even know. S. McClintock said word of mouth. Yeah, listen, if it was word of mouth, when I ask you guys to share the link, I should be getting, if it's really word of mouth, I should be getting a lot more people in here. Love this. Got a notification, says Jacqueline. So there we go. I didn't even know we did that. Roger said he did too. Dude, I turned on the computer and there you were. Wow. All right, so that's kind of cool. Just like, hey, I just come up and go, hey. That could be kind of scary if you see that happen. So it sounds like there was an alert sent. There it is. But there's the cues, folks, right at the session highs. Remember, I'm looking at 5 minutes right there at session highs. There's the cues. There's the VVC. Everything is above my 20 exponential moving average. It is exponential, right? I forget whether it is exponential or not. Where is it? Earnings. It's a simple moving average. It's a 20-period simple moving average based off of 5-minute bars. But there we go. Let me see if I can make this even better for you. How about that? Oh, I'm going to make it even better. Look at that. There's the market, folks. There's the market. I don't think I'm going to stay on until 4 o'clock. I don't think I need to do that. But how many likes did we get? I mean, I don't know how many people we got, but I know this was last minute. Joey, there you go. We got 28 likes. Man, I know we could do better than that. All right. If you guys liked what we did on the spot just like that, just hit that like button. Hit that like button. And folks, we're still watching the market live. All right, we're still watching the major indices to include our VectorVest composite live. And that's a cool thing. Qs are right there at session highs. The composite is. The spiders are getting there. The Dow is the only laggard, for the lack of a better word, whereas all of these are other concerns. Let's go to the home page. Right now, everything is up. The NASDAQ is up almost 3% today. The VectorVest composite, let's do it this way. How do I do this? Let's go to here. There we go. Everything, look at that. The NASDAQ's at 3%, right at 3%. Nice move overall. Silver M9er. Says that was awesome, Glenn and Joey. Thank you guys for tuning in. I so appreciate it. I could get 30 in about 5 minutes. All right. Oh, you can get about 30. Are you talking about alerts? That would be bad if you got 30 alerts in 5 minutes. But this is where we stand. Everything is mixed. Everything is up. We got a green light in the color guard pricing column, primary wave up. Man, what I'm really looking for now is, can we get the underlying trend in the market to get above 1? But going back to the graphs, I'm going to put up another graph. And again, I don't always do this, but for the purposes of how important this was, let's go put this on a 3-month graph. Where are we? Look at that. We had a one white soldier yesterday. At the close, one white soldier, follow through, gap and follow through. The downward trend that we were looking at looks like we're still there. All right, but we're now well on the way of breaking through that. Very little wick at the top, so the market, oh gosh darn it, that's not what I wanted. There we go. That's more like what I wanted. The market's moving higher, nice gap up, very little wick at the top, so not a lot of pushback on the candle for today. So I do like that. I'm not getting higher lows right now. What I am looking at, a horizontal line. I got a solid level of support on the VectorVest composite sitting at 58.54. So I like 1, 2, 3, like a sort of like a triple bottom, setting up for a nice rebound. And I've got a level of resistance, sitting at about the level of 63.51. It's got a little ways to go. We'll see what happens. Go back to my other. There it is. Ooh, coming into the close as we were getting close to the session highs at 332. We're pulling back a little bit. I don't know what that is. I don't know if that's just people taking profits for today. Could be across the board. Markets are up nicely. And let's do this. Let's go to Unisearch. Let's go to searches, price, volume. Let's put up 10 daily boomers. What stocks are moving? As a subscriber to the VectorVest software, I can do this kind of analysis and pull up the fastest moving stocks out of 9,000 stocks to see what's moving up the most. As I've been telling you as much as I can, we do offer a trial to the VectorVest software, which is www.vectorvest.com/YT for a 99-cent trial. 99-cent trial, and you can do what I'm getting ready to show you right now. So out of over 9,000 stocks, I'm looking for the stocks that have a price greater than $2 who are up at least 10% for the day, and sorted by the stocks that are up the most. So I don't have any penny stocks. These are all stocks. When I say penny, like 20-cent, 10-cent stocks, these are stocks all have to be greater than at least $2. Now, if I'm looking at the market's move today, view the stock graph, do I still have opportunities to trade coming into the close of business today? Well, I see ZH, which is a Chinese company. A lot of the Chinese companies went up really nicely today. Look at the early move, gapped up this morning, found a session, final level at a high at about 1205. Now coming into the close, bouncing off support above the 20 simple moving average. Would like to see if it can close above that level up. Ooh, VNet, look at that. Now, if we could have found this earlier this morning, and these are the kinds of stocks that we can find in our jockey club. Look at that. Look at that early this morning and still moving up. Look at that all day. Instead of all night long, how about all day long, all day, all day long, all day long. And there it is. Look at that. Trading right at the session highs right now. Could be a buying opportunity going into the close if it can go 5 cents higher than the high. Could be some. Watch that coming into tomorrow. I like that move. I like that move, and I cannot lie. CWeb, same kind of scenario, hitting end of day new highs for the day. Gapped up above the 20-day simple moving average. A little bit of a sideways move, but really never even faded the gap for the day. If it can go higher than the high going into the close, that may not be something bad. CWeb. Now, KC, I almost wanted to call that Kentucky Fried Chicken or KC in the Sunshine Band. Kingsoft Cloud went up, found a level of resistance at 608, hit it once, hit it twice, got into the zone about the third time. That was a strong level that it could not overcome. It could not overcome. Can you take off the VectorVest logo blocking the visual? That must have been on another screen. Sorry about that, Miss McClintock. I'm not feeling that one going into the close. I'm feeling this one. Why? Because it's moving up. Now, interesting that 1, 2, 3, 4, about 20 minutes, because these are 5-minute bars, 20 minutes of indecision, but the stock jumped up nicely, stayed above the 20. I'm going to change the graph a little bit. Let's go bring up another graph layout. Where's my aggressive one, my trade one? Now I'm looking at the 3 and the 8. Now I'm looking at the 3 and the 8, the RT and the volume. All right, so that's more of an aggressive trading throughout the day. When the 3 went below the 8, that could have been a good opportunity to get out. When it went back above, that could have been an opportunity to get back in. And right now, going into the close, the 3 is above the 8. DDL, I don't like that stock because of how it sounds. I don't like it. Sigh. Voice emoji, gapped up, never, actually did start to fade the gap on the second 5-minute bar, but look at that, bounced above, what is that, 342, came down, found a level of support, 3 and 8 cross, boom. That was a good opportunity until it went down, bam, get out, stay out, 3 went above the 8, boom. Look at that going into the close. If it can take out that high going into the close, this is something I would keep my eye on going into the close as well. Now, Becky, I'm going to call it Becky with the good, I can't say that. Anyway, stop laughing, Joey. We got it gapped up at the open, found a level of resistance, and wasn't really able to come back up and take that out. Are you in the user group? Oh, you guys are talking among yourselves. That's fine. I bought Zim last week, still doing nicely. I was in Diana Shipping. I think I got out of it. I think I did. I don't know. I think I did. I don't remember. Let me see if I can move this over a little bit. Where's my Schwab account? I still got 1,000 shares of Diana Shipping. I still got it. I thought I got out, but I still got it. Zim has been a good stock. Not only is it in a hot space, Diana Shipping. Yeah, I still got 1,000 shares. Not only is it a good space, but Zim was good because of its dividend. That was awesome. Thank you, Marie. Marie says, hi, Glenn. Love your analysis. Thank you so much. Good for you using Schwab, Glenn. Yeah, that's what I use. I got a good, nice update today on the stocks that I do hold. I did get out of my UVXY trade. I'm glad I did that. It was down 13.84%. Zim, Start, all of those. There was another one we looked at today. How many people remember the stock that we found today on Midday Market? That was a shipping that looked great. How many remember the ticker symbol? It was a shipping company that looked awesome as a shipping company. Anybody remember what it was? Anybody remember what it was? While you're thinking about that, CD, look at all of these stocks coming into the close, taking out the session highs. Let's go see what happens with that. I like some of these stocks going into the, taking out highs at the end. Look at that. Look at this happen. There it is. Again, look at that. New high. Inexpensive stock. Rising volume. Got a little bit of conviction. I like some of these stocks going into the close of business tomorrow, going into the close of business today. IQ. Nobody remembers the stock that we saw on Midday Market today? See if this brings up a memory. Shipping company. Look at that. Look at that. Another one. Now, does this pay dividends? And I don't think it does. Let me go see. Let's go to swing. Is dividends on this one? How come I didn't set this up right? There's the earnings per share. Add a parameter. Dividend. Does this pay dividends? Yes, it does. 20 cents on a $5.83 stock. So it does pay dividends. It's probably too cheap to do a No, it does pay a Now, decent. How much is that? 20 cents? Somebody do the math. What's the percentage of that? What's the percentage of that? Somebody. I don't know what the percentage is, but it does pay a dividend of 20 cents. Earnings per share is sitting at $1.04, and they're growing it at 34 cents. Oh, sicky 4. That's 4%. Thank you, SIF. Look at that. All right, hold on a second. Let's do a little bit more analysis on that. PANL viewers. Let's go to stock viewer. PANL. Let's go analyze that some more. So we know that it pays a dividend. Let's talk about that dividend. We know that it pays a dividend. Look at the yield. The yield is at 3.45. They make earnings yield is $17, and holy smokes, they blow that dividend. They can more than pay for that dividend. Dividend safety at 57. Dividend growth at 16. Yo. And let's go put this on with Zim. What's the other stocks you were looking at? GOGL. What's another one? DSX. That's the one I'm in. DSX. Comma. Oh, man. Ooh. Michael says powerful 7.3 magnitude earthquake hits North Japan today. I've been through one earthquake in Japan, in Okinawa. I was standing fire watch, and the building shook. And I told everybody, wake up, wake up. Everybody looked at me and said, Tompkins, shut up. It's an earthquake. I said, oh, okay. Look at all of these shipping companies. Is Panel a dry shipping? I'm assuming that it is. Hold on, let's go find out. Let's get a stock analysis report on it. Engages in the provision of seaborne, dry bulk logistics and transportation services to industrial customers worldwide. How cool is this, folks? We found this today. And it's right up there with Zim and Gogol and DSX. All of these have good upside potentials. They're all moving up. And Pangea is moving up almost as fast as Zim. They both have dividends. All right, that big dividend with Zim was huge. This is nowhere near close to that dividend. But how about this? Pangea has got a safer dividend. Oh, man. All right, how many of y'all just got your socks knocked off by finding another good company that's a lot less than Zim? Type of one in the room. How many of you just got your socks knocked off? At least, if you got your socks knocked off, I hope you got clean feet because you don't want stinky feet. You don't want stinky feet. But that's kind of cool that through the power of the VectorVest software, folks, we found this earlier. How did we find this? We found this as a stock that was moving up. Oh, no, it wasn't here. We found it. How did we find it? Was it one of the stocks that I gave you as one of my speculative plays? It might have been. All right. So, but all of the analysis that you saw me do right here, you have the access to do. 99 cents gets you access to the software. Right now, I'm just talking because I'm excited. This was really kind of cool that you guys showed up on the spur of the moment. To support VV Nation. And I totally appreciate that. Totally. FMGU up 27%. That's the other whole side of the FMGD, which was one of the stocks I talked about in my video. Oops, that's the GD. Let's go to FMGU. Nice upward move today. All right, it had an open price of 16 and it's up to 18.46. Nice move going into the close, hitting new session highs today. Nice move on that stock. Monica, why is the dividend safety on GOGL so much lower than PANL? All right, GOGL. Let's go take a look. What's the dividend yield? 21. That's why. All right, so think about that. The dividend yield is at 21. That's a high yielding stock. High dividend yielding stock. Look at the earnings yield. So this tells me that even though they are paying a dividend of $2.50, notice that the dividend safety is low. The dividend safety is low because the earnings yield tells me that they may not make enough money to support the dividend. Does that make sense, Monica? That's a great question. Does that make sense? And that's what the analysis tells me. That because the earning capability is lower than the dividend yield, chances are it may not be able to maintain that dividend, and the dividend safety tells me that. Nah, Patrick, I put on the 3-month graph only on a couple of them. That's not what I do here in the live session. All right. That's one of the things that I try not to do. I did it on a couple because of today's activity, but I usually don't use a 3-month graph on the live sessions, just on Trending Thursday. Monica says, thanks. I was looking at another number under DY. Thank you. You're very welcome. All right. You're very welcome. Their E-yield is much greater. Monica says their E-yield. No. Okay. You were looking at a different number. Okay. That's fine. All right. But that's huge. That's huge in the stock's ability to continue to maintain that dividend. And then, you know something, even if you miss that, the dividend safety, Monica, is there for you. That's why the dividend safety is there for you. Panel's dividend date was yesterday. Oh, did they pay? Well, let's go take a look at the graphs. View the stock graph. Let's go look at it today. There's Zim. Nice move today. Not at session highs, though. Came out the gate hot and fell kind of quickly, and then fell some more, but now rebounding going into the close. I still like this stock, but maybe the PANL may not be a bad choice, being a little bit less expensive. Panel has a low market cap, and it has a low market. And you know something? That may not be a bad play, especially if the market wants to try to move higher. What kind of stocks are going to move quick? The low dollar growth type stocks. Does that make sense, Miss McClintock? That's what's going to start moving. The low dollar high probability growth stocks are going to move. Now, keep in mind, all of these, in my estimation, are growth stocks because they have the relative values above 1. All of these have good upside potential. This space is is no joke. Don't sleep on the space. DSX, this is one of the stocks that I own, and now I'm compared to Zim or Pangea. I'm still okay in my Diana shipping. It's above my 20-day. A little bit of a pullback today, but still sitting in a channel. Unless it breaks through that level of support, sitting at the value of 438. I'm gonna keep on trucking. Keep on trucking, baby. I'm gonna keep on trucking. I didn't say no bad words. I said trucking. All right. So shipping companies. Let's do this. I will look at an industry graph on it. Let's look at what the industry looks like today. All right. If the stocks within the industry are moving, what do you think the industry is doing? The industry should be moving as well. Still looking, working. Higher than the open. A little bit of topsy-turvyosity. That is a Glenism. A little bit of topsy-turvyosity going on, but it is going into the close. We got about 12 minutes into the close. Going into the close, it is moving higher. Even the earnings per share today jumped up. That's intraday. That's interesting. That doesn't happen on very many stocks. That intraday, the earnings per share will jump. All right. So I was getting ready to go, and then you guys just kept making me talk because I'm not trying to talk. I'm just trying to, if you haven't already, if you're brand new to the channel, hit the like button or hit the subscribe button. All you guys that came here today on the spur of the moment, I appreciate it. Hit the like button if you haven't already. If you're brand new, you're just stopping by at this live session, don't forget to subscribe to the channel. That was kind of awesome that you guys showed up. That was really, really awesome. So you never know when we'll do these things, but it is what it is, and thank you. So I'm not going to even sign off. Hopefully you enjoyed this, and between Patrick and I, when something like this comes out, between Patrick and I, we may go live. You never know, especially if it's something as important as the rates. And that's why Midday Market for the month of March has a Wednesday session. All right. But after March, we may do something different. Going into April, we may do something different. So you never know. But we'll see. Look at that. The NASDAQ is pushing 3.5% up. That's a big move on tech stocks. Our composite is pushing 2.5% up. Solid green light, primary wave up. This was awesome. Glenn, how can you not sign off? All right. I guess I'm going to have to sign off. All right. That's why they need to hit the bell on the icon to get notified. Absolutely. If you have subscribed to the channel, we sent an alert. I didn't even know we sent an alert, but we sent an alert and you guys were alerted. Thank you for that, Patrick. All right, so I guess I am going to have to sign off. Roger says, awesome that you did this. And again, whenever the time is right between Patrick or I, we may just do this on the fly. You never know. You never know. All right. With that, folks, adios, arrivederci, ciao, au revoir, sayonara, aloha to all my peeps in Hawaii. Bom dia, salam, shalom, namaste, yasu. Till next time, folks. See ya.